Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at SPY daily weekly time frame, bulls buying the dip again. Even though we hit a lower low by about 9 cents, not significant, but the bulls bought the dip in a big way and closed up near the high of the day, yet again defending the middle Bollinger Band support. So it's really nice having this middle Bollinger Band as a guide to keep watching and to keep watching the bulls defending that level. So we've got Fed Day tomorrow. That's going to be a driving force. We're either going to head back to the all-time high of 229.71, or we're going to lose the middle Bollinger Band support and look down to 225.27 as the higher low pattern on the daily. So it's going to be a very important day, and watching the direction into the afternoon and into the close is going to give us some indication on where we're going to be headed in terms of February. So the weekly time frame, still very bullish. Inside candlestick, holding exponential moving average supports. Not a ton of information to have on the weekly chart. As I keep saying, it's all about the daily chart, middle Bollinger Band, and the higher low pattern. And of course, watching that all-time high, which the bulls are having their sights set on. So it was a very clear bearish pattern to start today, lower highs and lower lows, and we knew the bulls weren't doing anything if they couldn't break the lower high pattern, which they did end up breaking, and then the last 2 hours of the day, it was just straight up. We only had one period where we had 2 5-minute red candles in a row. Other than that, it was just straight up green, showing tons of bullish strength into the end of the day. So where does that put us on the hourly time frame? It put us closing above all hourly moving averages, turning them into support. I take that back. We still have the 100 period hourly resistance, but the main 200 and the 20 period, I was watching those levels because we rejected from them right at the start of the day at the high, and then we gained them as support at the end of the day. So like I said, the bulls buying the dip, showing strength, and we're watching the high of the bounce attempt yesterday, 227.76. If the bulls can break that level, it's essentially a double bottom. Again, it was a lower low by 9 cents, not very significant. And then if we break 227.76 tomorrow, we'll have a little potential turnaround. And just to zoom out, the hourly chart, the 10-day hourly chart, trying to reverse this trend, but we have to break the lower high pattern by getting over 227.76 in order to do so. So it was a steep pullback after a big-time bull breakout, and now the bulls are trying to build a base of support in the lower 226s, the mid 226s, which we bounced off the past 2 days. So tomorrow, FOMC in the afternoon, we'll be watching that very closely, and the reaction is going to dictate where we're going to be looking for at least the next week or two with regard to the middle Bollinger Band daily. So I appreciate you watching. We'll check back in tomorrow and wrap it all up and see what the result is. See you then.